Hello, good afternoon, everyone. Thank you for your presence during our earnings conference for 2Q22. My name is Vanderlei Rigatiera. I'm the CEO of the company and one of the founders. And I have with me Andre Valente, the CFO and IR officer. We also have our COO with us, our Director of Operations. He'll be part of this at the end in case we have any questions for him. We've prepared some slides to show you today what this last quarter was all about. I'll give the first part of the presentation and then I will hand over to Andre Valente. And he will give the rest of the presentation. So let's begin. Next slide. Hello, everyone. Good afternoon. Before Vanderlei begins, I'm going to read the disclaimer. The statements contained in this document regarding WDC Network's business and growth prospects are based solely on the management expectations for the future of the business. These expectations depend substantially on market conditions, the performance of the Brazilian economy, the industry, and international markets, and therefore are subject to change without prior notice. All variations shown herein are calculated based on the numbers without rounding. This performance report includes accounting and non-accounting data such as operating and pro forma financial data. The non-accounting data was not subject to review by the independent auditors of the company. Thank you. Back to you, Vanderlei. Next slide. Vanderlei, I think you're mute. Okay, thank you. Okay, so I'd like to start off by giving some highlights for this quarter. I would like to say that we once again beat the records of net revenues in the solar division and have also significantly recovered the sales for enterprise and telecom. I believe you remember that in the first quarter, we were suffering a little in terms of sales volume. Our net revenues in solar achieved 96.7 million, 36.5% more year-over-year, and achieved a backlog in revenues where once again, all the revenues that we have to perform of our TAS agreements, they have already been signed and have already been delivered to our customers, and we recognize the revenues on a monthly basis according to guidance from our accounting auditors. So 639 million, almost 640 million, that's 23% less than when we had in 2Q21. Another important thing is that we've grown total sales, which is the sum of the sale of all products plus the contracts. The PSV of the new signed contracts that grew 26.8% quarter-over-quarter. And that's important because it shows a recovery this year of the sales growth. Our consolidated net revenue was 284.3 million in 2Q22 compared to 276.7 million in 2Q21. That is a growth of 2.8% year-over-year. The consolidated adjusted EBITDA was 67.4 million in second quarter compared to 68.5 million in 2Q21, a slight drop of 1.6% year-over-year. The adjusted EBITDA margin was 23.7% in that quarter, compared to 24.7% in the same period last year, a reduction of 1 percentage point in that period. Total sales in the telecom segment were 158.9 million in 2Q22 compared to 135.6 million in 1Q22, a growth of 17.2% quarter-over-quarter. So you can see the recovery of that segment that was slowing down. The total sales of the enterprise segment was 101.1 million in 2Q22 compared to 63.7 million in 1Q22, which was a significant growth of 58.6%. And that shows a bit of the recovery of the corporate business with the end of the pandemic, or at least the decrease of the effects of the pandemic, where we suffered a lot last year. The company is once again presenting positive consolidated adjusted net income of 8.6 million in 2Q22 compared to 25.2 million in 2Q21. The KPI of produced goods in our plants in Brazil reached 61%. That's very significant because every time we produce more locally, we can improve our operating margin. We have an external corporate rating issuance through two companies, not only Standard & Poor's, but also Moody's. In May, they ranked us as AA negative, and that was very important to show our financial health, the quality of our receivables, and the company's plan. And we also had our second emission or issuance of debentures, an amount of 500 million, two series with terms of 5 and 7 years and a grace period of 3 years for amortization. That gives us breadth in capital to go through a good period and grow our task model, operate our inventories, and improve working capital. So this is a summary of the highlights. And now I'd like to hand over to Andre Valente to go into the details of these indicators. And at the end, I'll come back so we can talk about the future and answer any questions you may have. Thank you. Andre, the floor is yours. So on the next slide, we present the evolution of consolidated total sales for the company. In 2Q22, they achieved 372 million BRL, and that's a variation of minus 4.6 year-over-year, and a growth of 26.8% quarter-over-quarter. In the year-to-date for the year, we have a negative variation of minus 6.5% compared to the first half of 2021. We'd like to highlight that considering that our sales are always anchored to the exchange rate on the date of sale, as the exchange rates have dropped when we compare 2Q22 to 2Q21 or 1Q22, you can see a negative variation caused by that drop in the exchange rate. Here in gray on the bottom of the slide, we can see the average is in the sales. And here we show what our operation was when we consider it in USD. That's the day-to-day of our operation. And when we see the minus 4.6%, because we're considering that in dollars, so we had an impact of 7.3% resulting from the exchange rate. And for the half year, instead of 6.5, would probably be flat when we consider in dollars, given that the exchange rate effect caused minus 6.1% when we compare the first half of 22 to the first half of 21. On the next slide, we have the evolution of net revenues. Net revenues show us a more positive scenario than what we see in total sales. As net revenues consider the entire modality of TAS and recognizing the revenues on the monthly basis according to each rental agreement. And therefore, we have a more positive effect. When we look at the quarter, we had a positive variation of 2.8% year over year, achieving 284 million BRL in net revenues for the quarter. And year to date, 525.5 million, showing a growth of 4.6%. We'd also like to call your attention to how much each segment represents for the company. So the solar business, 40 or 34% of the company, telecom 41%, and enterprise 25%. Solar is achieving the 34%. Year over year, it accounted for 25.5%. So according to our projections and expectations, every quarter solar is gaining more share in the total company mix. On the next slide, or actually before I go into the slides of each segment, we decided to show this one first before telecom, so you can see what's been going on in the fixed broadband landscape in Brazil. So this is the official data available on the Anatel regulator website. So we see since the closing of 2020 up to June 2022 closing, you can see the total number of households connected in Brazil. As you can see in this, across the 1.5 years, we had pretty much 6 million new households connected, going from 36.4 million to 42.1 million in June 22. We've already always betted on the fiber optics connections. So here you can see what it represents. So you see much stronger growth in this case, going from 17 million connections in December 2020 to 27.8 million connections in June 2022. And the purpose of this slide is to show you how it behaves quarter after quarter and has been behaving in the last quarters. In 2Q20, you can see we had an addition of just 100,000 new households connected. And in the red arrow, you can see that we went from 27.7 to 27.8 million households connected. And when compared to year over year, we have an addition of new connections in 2Q21 of 2.4 million. So here it's visible in terms of market difficulty in telecom. Another interesting aspect, you can see other connections on the bottom, showing the less technological connection, so to speak, which is the base that's been replaced by optic fibers or fiber optics. And fiber optics has almost 11 million new subscribers. And the other connections dropped from 19 to 14. So lower 5 million less connections that have less technology. And we predicted that, and a lot of our volume was focused on servicing that technology replacement, which should end at some point. However, we can see that we still have 4 million in access in those technologies. So there's also the point of view of an opportunity of getting more volume by replacing with fiber optics. But in the past 2 quarters, you can see that the number of subscribers have not grown substantially. In the last line, you can see the density on access per 100 inhabitants. It has been growing from 17 to 19, almost 20 households connected for every 100 inhabitants. And our understanding in telecom, even though we have the past 2 complicated have quarters, we do have future expectation for growth considering the microeconomy that we're presenting here, where we expect that the population will continue to grow in the next years, and the density on access for every 100 inhabitants will bring in new household connected and more infrastructure relating to that. Another interesting information that you can see in Nanotel's data is that among the 20 households connected for every 100 inhabitants, we have more developed states, such as the south of the country, with over 30 households for every 100 inhabitants, and some states up in the north and northeast of Brazil, we only have 6 households connected for every 100 inhabitants. So that kind of information shows us the potential to develop internet connection across the countryside of Brazil. And that is a segment that we are highly connected with. Now, let's look at telecom data on the next slide. Here we show that we delivered total sales of 159 million BRL in 2Q, and that shows a drop year over year, but an evolution based on what we saw in the first quarter of 22. In this quarter, we provided the routers that are connected in these households, so 196,000 compared to 177,000 in 1Q22. So the macro scenario of the number of households connected is much worse than what we observed in our sales, and that's a result of successful strategies in the company of focusing new revenues by implementing turnkey projects and also data centers in the telecom segment. We also observed an improvement in the supply chain, but this half year was still very much affected because of the lack of GPON boards, and that's very important in the technology chain of ISPs. About the margin, in this scenario, at 28.6% of gross margin, we saw a drop not only quarter-over-quarter, but also year-over-year, mainly resulting from the terms of the new TAS contracts. I'll give you more flavor on that further into the presentation, and lower sales margins, also given a flatter scenario that we've seen in these 2 quarters. And we believe that at some point we should go back to seeing growth in the telecom segment. On our next slide, we can see the enterprise segment. Enterprise has very good performance for the quarter with net revenues of 71 million BRL. That means 5.8% of growth year-over-year and 27.6% growth quarter-over-quarter. As Vanderlei mentioned, mainly a result of the pandemic. We didn't expect it to affect the first part of the year. We saw events being canceled and social events, carnival and other social events, and that postponed some projects and investments in that industry. In the second quarter, we've seen good recovery speed, and we expect that that should continue in the upcoming quarters. The margin was another very positive aspect in enterprise, achieving 33.6%, significantly higher to all the comparisons, not only quarter-over-quarter, but also year-over-year. Mainly a result of the mix of the higher relevance of professional audio and video and cybersecurity that's been bringing in good projects and successful revenues from our areas that are involved in that. Next slide, we have solar. Solar beat the record of total sales and net revenues, achieving 112.9 million total sales for the quarter, and annualized, that means a track record of 451.6 million BRL. We're still working to deploy TAS and solar, so I'd like to remind you that we only started with TAS and solar after 2 years in the segment. We started from scratch in January 1st, 2020. We celebrated 2 years, and we ended at 33 million, the size of the segment. And then we felt mature to put into practice the TAS implementation in that segment. In the first quarter, we had 1 million in sales in TAS and multiplied that volume by 5, reaching 4.6 million in 2Q22 total sales for TAS and solar. There was a lot of pressure on margins in that quarter, given the high levels of inventories of all players in the segment, leading to more competitiveness and shortage in credit lines from financial institutions, given the macroeconomic scenario where most of our customers' projects had their credit lines denied, or it's taking much longer to be approved than it used to be in other quarters. So we're very diligent in this case to bring in solutions and management to monitor and achieve good performance, not only in sales, but also bringing in better margins to the segment, because we believe it should always be higher than 15%. On the next slide, we have TAS performance. We've sold new contracts in a total amount of 346 contracts, and that's an evolution compared to the 249 contracts sold in 1Q22, but still far from the numbers sold in 2Q21, mainly as a result of what happened in telecom. And telecom is our segment where the maturity of TAS is very high. So there's an effect coming from telecom in this product, but the product still has a lot of traction among customers. The total volume of TAS achieved 105 million in total sales, means 22.8% quarter-over-quarter and minus 20% year-over-year, once again, because of the telecom segment. CapEx was 42.8 million in mobilization in the second half of the year. And here we see the markup of TAS. So we achieved record levels of 2.45. So for every 1 BRL of CapEx in a TAS contract, we get 2.45 BRL in total sales in that same contract. So that's a higher level, not only to what we saw in the first quarter of the year, but also year-over-year. And in the last bullet, you can see that we are continuing the strategy to extend the terms, achieving 51 months in this quarter compared to 47 months in the average terms of contract sales in 2Q21. So solar in this case should bring a continuity in the extension of terms given that the type of project and product require a higher term. So in solar, we should be, for the big power plants, higher than 60 months that we had as a standard. So that should contribute towards the increment of the terms in or for the company. Next slide. We have the revenue backlog evolution. And this is a very important indicator for the company where we practically achieved 639.9 million BRL in 2Q22, a 23.2% growth compared to the backlog 1 year ago at the closing of 2Q21. So we grew 23.2%. The backlog is very important because it shows the revenues that will be accounted for and received in the future and ongoing contracts where we already have the CapEx. We've already incurred all the expenses, not only for production, freight, and commissioning for salespeople. So the only payment that we have to make here for cost or expenses would be the PIS and COFINS tax incurred on this. And you can see the recognition and receivable schedule on the bottom according to contract terms. On the next slide, we can see a variation analysis of the adjusted EBITDA for the 2Q22, which was 67.4 million, compared to 68.5 million in 2Q21. We had a drop that's explained by the drop in sales volume of 8.2 million. As you can see, the 8.2 comes from what happened in the telecom segment. So on the table on the bottom, you can see a breakdown of the margin and volume impacts to each of the segments. So obviously we suffered with the volumes from telecom. We had an increment of average margin in pretty much all divisions, bringing to 12.8 million of a positive impact, and with an increase in operating expenses of 5.7 million, resulting from specific factors of applying inflation to the general costs and expenses of the company. We had an impact of increase in delinquency in some customer niches, especially telecom, bringing on provisioning for bad debt in that period. We had an increase in marketing and travel expenses when we compared to 2Q21. That quarter was affected by the pandemic, so we didn't have any marketing events or travel. And in this 2Q22, the company is completely active, going to events with a lot of traveling and visiting customers to continue to plant the seeds so the company can continue to grow. And in expenses, we had more expenses in freight because solar has a higher mix in the company. Solar products are bigger and weigh more than the general average, so that percentage of freight affects the total amount of cargo, and it's higher in solar than what we see in the other company segments. On the next slide, we have some other drivers of our results. We have depreciation that grew from 33.4 billion to 41.9, so a growth of 25%. From 2Q21 to 2Q22, the increase in depreciation is very much in line with the increase in the backlog of revenues. So the higher the backlog and revenues, the higher it is because we have more contract agreements, and that brings in more property, plant, and equipment, and more depreciation. So the percentage variation of the increase in backlog, increase in depreciation is very close and related. The financial results for the company, as you can see here, has achieved minus 16.2 million BRL, almost zero in 2Q21, and compared to 1Q22, 30.9, we had a positive variation. So here on this table on the bottom, you can see the main factors of the variation of the financial result. Here, I would like to highlight the higher financial revenue, which is a result of cash management and applying these funds and financial revenues of 3 million or 10 million compared to 3 last year. And in 2Q21, we have an operating exchange variation that was positive compared to 4.5 for 2Q22. We're still suffering with the present value adjustments given the interest rates. Every time the Brazilian interest rate Selic increases 1 percentage point, as we've seen in the meetings and the average that they have, we see a higher provisioning for the present value adjustments on our balance sheet. So the minus 6.9 million compared to other smaller amounts in previous periods. We also have a basic effect of increasing financial expenses given the increase of the Brazilian interest rate. So it was much lower in 2Q21 compared to the Selic rate in 2Q22, leading to another 10 million in financial expenses. On this slide, we show the net debt and leverage indicators. Andre Valente is mute. Vanderlei, could you continue? Andre, you're mute. Yes, we can't hear you. Can you continue, Vanderlei? I'll try. Okay. So here we're talking about our net debt and our leverage, as you can see on the slide. Our net debt in 2Q was 424 million, and that gave us a leverage of 1.5 times over EBITDA, very much in line with what we establish as a healthy standard of indebtedness. We don't want very high leverage. Are you back, Andre? Yes, we can hear you now. Go ahead. We can hear you, Andre. Go ahead. Can you hear me? You just muted yourself. Unmute, please. Andre, you're still mute. Go ahead. Okay, thank you. I'm sorry for that. I would say, okay. Let's take a look at the cash flow now. On this slide, we have the cash position in the closing of last year for Q21 compared to the 536 million in 2Q22. We had operating cash generation in the first column of 143 million. And here for working capital, we have 178 million. That's separated into inventory, suppliers, and accounts receivable for the company. We have task CapEx and the deployment of new contracts that started in the quarter. We amortized debt and paid interest in the amount of 165 million. We had an issuance of debenture and follow-on, bringing in 493 million and paid 11 million in dividends. So that's the bridge analysis in a simplified manner of what happened to the company's cash flow. For further detail, you can see our cash flow statement. So in our opinion, those are the main aspects of that. On the next slide, Vanderlei, over to you. Okay, thank you, Andre. I believe it's very important for us to have had this quarter. In my opinion, it's showing us that things are recovering. The macroeconomic scenario is not helping. It's still very challenging, demanding a lot of attention in managing working capital. I'm sure all of you have perceived that there's more delinquency of customers. And when I say that, I mean late payments. I'm not saying that we're losing revenues, but they're paying late. A feeling that these customers, especially in telecom, as you've seen, the number of net additions of fiber users has dropped significantly. We've been still seeing that on the provider side, still a very high churn. They're in a tight competition for the same customer, and the consolidation of providers also affects that scenario and makes it more challenging. In WDC's case, we not only sell for new subscribers and new users, we have other revenue lines that are in line with what we talk about in improving the quality of providers' networks. If you talk to any professionalized provider today, their main concern is in improving the quality of the network, be it by replacing the physical network or implementing better cops with more resiliency, or implementing data centers to have content closer to their subscribers. So we've seen that more people are looking for built-to-suit projects. So that would be the case where WDC would build the network, the physical network, and rent the entire infrastructure. That is a very interesting model for us, where we take a deeper dive into the value chain of providers. It is a higher investment on our side, and revenue recognition takes a bit longer, but it does establish a more strategic relationship with these providers, not just selling or renting the fiber modem or central or ELT that they're using. They're part of the operation. And the other one is the continuity of the solar segment growth trend. This year, without a doubt, and you always monitor that, we had expectations that solar would explode in consumptions. But with the increase of the interest rates, that slowed down many projects that were in the pipeline. So customers were doing the math again about their return on investment. For residential subscribers, there was also an impact in the change on the ICMS tax levied on the power bill. So every time something like that changes, people do the math and they say, well, maybe I can postpone this. Interest rates and financing is still high. We know that today, 70% of all solar sales for residential, especially residential, is financed. So if you increase the interest rate, it drops. But in spite of that, we grew. So that means that we are well in line in solar. As you all know, and we've disclosed that, we launched a new line in WDC Solar Titanium, which is a low cost line to achieve a different type of subscriber, level of subscriber. And then that will result in something and changing the price of the solar kit. So we had a good result in enterprise, and we have good future perspectives in that. Many projects to be delivered that we've already closed and still haven't brought in the products, so that segment is still suffering from the production chain. We've been doing very good things in terms of bigger projects. The projects and infrastructure that require more surveillance cameras and more IP telephone systems, LED panels, and sound systems. With the end of pandemic, they have come back in the out-of-home media companies, for event companies, churches. All of that has given us good perspectives of what's coming. And the company is still looking for M&A opportunities. We do receive many opportunities, but we want M&As to add on to our operation, not a transformational M&A. And we're always on the lookout for that. And we will continue on that process this year. That's what we had to say for today. I believe that now we can open the Q&A session. Andre? Yes, I think I'm back. I'd like to introduce everyone. This is Marcelo Rezende, our COO. Hi, good afternoon, everyone. I'd love to hear if there are any questions about what was presented. I don't see the questions. Do we have any questions? Okay, I can see the questions now. We have two questions about perspectives, not only for the second half, but also for 2023. Maybe I can answer this, Vanderlei, and you can add if you wish. I think it's important to highlight to everyone that the company does not give guidance about future earnings and sales expectations. We've been monitoring the market perspectives, so we believe that among the segments where the company operates, we have a positive outlook for the second half and for next year, m- much in the sense that we will continue to recover the enterprise segment, considering uh, the post-pandemic scenario and events recovering. In solar, we contract many studies from many different institutions and the Brazilian Association of Solar Energy, so that should continue to grow, significantly grow in the upcoming quarters. And the company has internal planning to continue to grow, so we imagine that we should have good numbers in the next quarters. And in telecom, when we look at the past 2 quarters, we can see what happened in the market, and we believe that that is not a long-term trend. We can't imagine or can't fathom that the population would not stop growing and people would be less connected. So we are on the lookout to implement product and service portfolios that service the needs of all the players that are growing in that segment. So our expectation is that we should have continuity of growth. And as we mentioned in the roadshow before the IPO, in telecom, we don't expect such strong growth percentage-wise as we've seen in earlier years, but we still believe there will be growth in the segment. I think it's worth noting that we've seen the importance of projects as we've been growing in the value chain of providers, ISPs, and customers in providing turnkey data centers. That offers us other opportunities for value added and more presence in our customers today, with a possibility of incrementing tasks to that initiative. So we see that initiative with good eyes. Another very important aspect, even though we still have problems related to supply, international logistics, and product availability, we've seen that the worst is in the past. So the manufacturers that we represent here in Brazil, most of them seem to have been stabilized, even though they have a longer lead time, which makes us think better in inventory investment. But it seems like the worst is behind us now for the second half. Now we believe in terms of supply, it should improve and not worsen. We do have another question here, Vanderlei, about the relevant variation in non-current liabilities. So that's the long-term liabilities, and it went up a lot this quarter because of the issuance of the debenture. So the debentures gave us a better distribution of the duration of company debt, considering that we issued one of the series is 5 years with a grace period of 3 years, and the second series is 7 years with a grace period of 3 years. So considering the 3-year grace period, that means that the 500 million of the debenture would be in the long term for at least 2 more years. So that's the main explanation for the investor that asked about that, for us to have a high increase to our liabilities. And that will give us the breadth so that we can continue on our growth plan via TAS. That was the main objective of issuing that debenture. It makes us safer and gives us more breadth to go through these more difficult times up to the end of the year. Okay, we do have one more question. One investor asking about supply of the chain. Marcelo? Well, it seems like the worst is behind us in supply. Some manufacturers are still affected by the chipset. The logistics costs are still high. Now it's down. International transportation is going up again. So we're paying much attention to the China-Taiwan situation that really affects the whole world in logistics. So that's a concern, but that's an international situation. It doesn't depend on us here at the company. But my impression is that most of our suppliers are getting back to normal. Like I mentioned, a longer lead time, but more stable, more visibility, and on trend for improvement and not worsening. And that's what we see for the manufacturers and providers that we represent here in the country. Okay, we have no further questions at this time. We would like to thank you all. Vanderlei, would you like to make your final remarks? Yes, of course. Thank you, everyone, for your presence, for your attention. It's always great to be here and tell you more about WDC, about our operations. And we hope and expect to have good times now in the future. And we'll see you next time. Thank you very much, everyone. Thank you, Andre. Thank you, Marcelo. That's it. Thank you. Bye-bye. Good evening. Good afternoon, excuse me.